you want to compete as a small country or do you want to compete as Europe? I don't think they have a choice because the US and China have already started the race. And Europe needs to follow. There isn't a European company in the top 20 largest firms in the world. That is a problem.
But what does it mean for individual countries within Europe?
You can have more control and less growth, or you can have less control and more growth. If countries trust each other more and they build more European champions rather than each country having its own national champion, growth is going to be better, productivity growth is going to be better, the welfare is going to be better. But there is going to be less control at the national level. So right now, each European country wants to have its own telecom company, its own couple of large banks,
Its own bank,
its own large energy companies. And the question is, are you willing to surrender some of this control to European firms, which are going to be more productive, but you are going to have less control at the national level?
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
As we spend some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg.
Early mover for you, Target, hammered. We're down by 19% in early trading. They missed, they cut their outlook, they got problems with inventory. It does not look good at all. The broader market's still doing okay. On the S&P 500, we're up by about 0.1%. If NVIDIA reports numbers like this a little bit later, I don't think this is where the stock market's going to be. NVIDIA reports after the closing bout, the stock market is doing okay. Under surveillance this morning, Starship blasts off. So here's the latest this morning. SpaceX achieving a successful launch of its Starship rocket in a much-anticipated event attended by Elon Musk and President-elect Donald Trump. Chad Anderson of Space Capital seeing big things ahead for space exploration, writing, under the new administration, expect an even greater focus on promoting the space economy and on commercial space integration into government programs. Chad, who has pioneered investment in the space economy for more than a decade, joins us now for more. Chad, good morning.
Good morning.
We've talked about the halo effect over Tesla, given the relationship with Elon Musk, with Donald Trump. What's that halo effect for a company like SpaceX? How important is it?
Yeah, well, I mean, I think there's it's a potent combination of having that kind of access and influence to the president, to the incoming president, and also to have the paramount solution in space. SpaceX is the apex player. So if they have a capability that the government needs, SpaceX is most likely to solve that.
You're invested in the company. Government contracts now, what proportion are they of overall revenue? What does that look like at the moment? How much bigger could that possibly be?
Well, government contracts play a big role in all companies across the space economy, and this is actually one of the reasons why it's been so resilient over the last couple of years when the when the equity markets have really struggled, because revenue's been hard to come by. But government contracts have increased. Conflicts around the world, geopolitical considerations, this race with China is all pushing a lot of dollars to capabilities. Space technologies are essential for our economic growth and national security. So governments around the world, including the U.S., are leaning in hard on these capabilities.
When it comes to a company like Tesla, you wonder about the halo effect, as John was talking about, for other car manufacturers as well. You talk about SpaceX and what kind of regulatory advantages could benefit other companies in the space as well. Are there any real competitors right now to SpaceX?
So you don't want to be in SpaceX's way, right? If you're building, there's a lot of benefits to SpaceX is building the railway, and there's a lot of benefit that now new opportunities become available that weren't available before. But you don't really want to be building something that's on their roadmap. They are the apex player, like I mentioned. we are finally starting to see some competition come online, I think, in 2025. It's going to be a big year. So this is the year that Jeff Bezos' Blue Origin is supposed to launch and reach orbit. Other launch vehicles are coming online that are using those Blue Origin-built engines. Rocket Lab, a publicly traded company on the NASDAQ, is bringing out their new vehicle to compete with Falcon 9. But as these companies come online and start to compete with SpaceX's Falcon 9, SpaceX is already superseding them and leapfrogging them with this new vehicle, Starship, that's coming online and really moving the goalposts.
Other than battle of the billionaires in space, what's the ultimate goal here? Is it to get to Mars? Is it to have tourism and on the moon? I mean, what is really the purpose?
I think it depends on who you ask. So if you ask us, we're really interested in the essential services that are coming from satellites. So this is not a luxury item. Most people think about the commercial, the International Space Station, the Apollo moon landings, space tourism. We're really investing in GPS positioning, which runs our financial markets. The modern global economy runs on GPS. Geospatial intelligence, so information about the movement of goods and what's going on the surface of our planet. Satellite communications. These are essential services. I think if you talk to Elon or if you talk to the president-elect, they'll tell you that Mars is the most important. And I do think that we're going to have a shift in priorities from the moon of the last administration and actually his prior administration to focus, to go more direct to Mars and leveraging more SpaceX, Starship sort of infrastructure.
Chad, when it comes to Elon Musk and President-elect's relationship, they've been almost joined to the hip since the election. Elon Musk coined himself the first buddy. As an investor of this company, does that outweigh any concerns you have that maybe Elon Musk should be paying more attention to his businesses than hanging out at Mar-a-Lago?
Well, so you want, as Americans, we would want somebody who is knowledgeable to be in post, right? I think you think back to the social media congressional hearings, the AI congressional hearings, and you think about the questions that Congress were asking big tech, right? And you could see how out of touch they were, right? So you'd want people who are in that role to be knowledgeable. The challenge here and the interesting thing here is that the titan of industry is not retired and advising government. He's actively involved in multiple businesses that are going to benefit. So this administration has shown that they are very comfortable with conflicts of interest. I think we're going to see that play out. And so as someone, with a vested interest in these companies' success, very selfishly, I think that that's going to be very good for the company.
But you think it goes beyond SpaceX and Tesla? This actually is broader for the space exploration and that industry writ large.
Yeah, I mean, the space economy at whole is going to benefit from this. So SpaceX is likely to be the largest beneficiary for sure, given his proximity, but others are going to benefit. We are, a lot of new novel capabilities are coming online. Regulation is having a hard time keeping up with all of this innovation. The president of SpaceX, Gwynne Shotwell, has said that it's regulation that's holding them back. Right, their test program will be happening at a much more faster pace, and so we think that we're going to see some of that pull through.
Chad, just quickly, they're going public anytime soon?
Well, I think a lot of people would like them to. I think there's a lot of benefits to being a private company. Sorry, Gwynne Shotwell has said that Starship is going to add a zero to their valuation. So already, like the most valuable private company, we're going to add a zero to that, I guess.
Wow, not struggling for capital, that's for sure. It's good to see you, sir. Appreciate it. Chad Anderson there of Space Capital. Coming up next on the program, we'll catch up with Steve Orth, the Federated. We'll speak to the former World Bank president, David Malpass. Target getting hammered in the pre-market. We'll catch up with Chuck Grom of Gordon Haskett. And we'll speak to the China Beige Book a little bit later in the next hour.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
One of the institutions you've been very philanthropic with is your alma mater, Harvard. But recently you've been
how to get the best funding for your startup idea. Let's get started. Here's the deal. If you have an amazing startup idea and need funds to fuel it, we're here to help. Simply send us a video where you explain your idea. Make it clear, concise, and compelling. Hook us in with your passion and vision. Don't forget to include your contact details so investors can reach out directly. This is your chance to shine and get your idea in front of people who can make it a reality. Imagine turning your startup dream into a thriving business. It all starts with that one simple step. So what are you waiting for? Grab your phone, hit record, and let your idea fly. The future of your startup could be just one video away. Remember, be clear, be passionate, and most importantly, be you. We can't wait to see what you've got. Let's get funded now.
Sort of made that point and caused a bit of a firestorm, and I got a lot of pushback. Why are you picking on students? And I said, look, you can't hide behind a corporate entity if you're going to support terrorism.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space. That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. From the world of politics to the world of business, Joe Matthew and Keely Lines deliver news, insight, and analysis live every trading day.
Okay, today I'm going to talk about how to succeed with a startup. Obviously, more than can be said here in 20 minutes, but I will do the best I can. The most important thing, the number one lesson we try to teach startups is that the degree to which you're successful approximates the degree to which you build a product that is so good, people spontaneously tell their friends about it. Startups always ask us for the secret to success. They always want to believe it's something other than this, because this is really hard to do. But this is it. If you can build a product that is so good, people spontaneously tell their friends about it, you have done 80% of the work that you need to be a really successful startup. If you think about the most successful companies you know, Google, Facebook, whatever, you probably found out about them because a friend of yours said, you got to try this, it's great. So this is the bar. Something that people love so much they tell their friends about it. One important indicator for a product like that is a product that's simple to explain and easy to understand. If you can't explain in a few words what you do, and if at least some people don't say, oh, that's pretty interesting, that's usually a mistake. It's usually a sign of unclear thinking or a need that is not big enough.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
I want a bank that can help me budget for the things I need, like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
Hi, I'm Laurie Haynes, CEO and co-founder of Shirar, and I'm really excited to tell you that we are going to be raising funds for Shirar again. After a successful raise in 2023, it's time to scale.
We hope that you enjoy the pitch deck and the financial model. Any questions, please don't hesitate to ask us, and we can't wait for you to be part of Shirar.
It's going to be really, really difficult to manage inventory for these retailers over the next several months. There's another deadline in the middle of January, and then Donald Trump takes office, President-elect Donald Trump, and we're going to see some big moves on tariffs too.
January 15th, that's going to be the day where basically the union has suspended these strikes until that date. are these companies, these retailers, going to have to rethink maybe some of them that didn't go as far as Target in terms of their inventory buildup ahead of January 15th? Do they need to? Because it's going to come at a time where we're in the middle of also a transition of power, and then you layer that on top with the idea of tariffs, and we have a new man at the helm when it comes to tariffs, and that's going to be Howard Lutnick in this Commerce Plus agenda, tariffs and trade policy.
This time 2 weeks ago, when we woke up to that election win and the prospect of a red wave down in Washington, D.C., the focus of this market was on a positive growth shock driven by deregulation and tax cuts. The focus of the appointments so far, the big battle over who's going to be the Treasury Secretary, it's not about that. It's about tariffs.
Yeah, and this to me ultimately will matter most to people like these retailers. I just want to say something, though. If you're trying to think about tariffs and how to get ahead of it and to pre-order, which you are seeing some signs of in terms of the export data from China, what do you buy when you've got styles that are moving so quickly? Down in the pandemic, remember, people were wearing yoga pants and sweatpants and sweatshirts, and then all of a sudden they had to go back to work, and well, you know, and then you go back to work and you have to buy dress pants and you can't find them because they're not stockpiled. How do you assess the rapidly shifting fashions in this world?
I think it's really sweet that you still think people don't wear Lululemon pants to work, because let me tell you,
oh, stop trolling me.
Many people have not given that up. Many people.
That's true.
Okay,
that's true. We have
so
seen a
judgmental.
change of what is acceptable, I would say, in office attire post-pandemic.
Bramo comes into the office every morning wearing Lulu.
And
What
then
are you
I
talking about?
put on my suit. Come on. You
All
really
right.
going to troll me all morning?
Coming up this hour, Stephen Orth of Federated Hermes, as investors anticipate NVIDIA earnings after the closing bell. We'll catch up with the former World Bank President David Malpass on Trump's Treasury pick. We'll speak to Chuck Grom of Gordon Haskett, reacting to Target earnings with that stock down and down hard in early trading. We begin this hour with stocks more broadly higher. Equity futures up by about 0.1%, lifted by tech optimism as investors look ahead to NVIDIA earnings after the closing bell. Steve Orth of Federated Hermes seeing more room for stocks to run under a second Trump term, writing the following: the coming Trump presidency is likely to be positive for economic growth and eventually for lower inflation and interest rates. All of this is stock market positive, particularly for large cap values, cyclicals, dividend payers and small caps. Basically everything, Steve. He joins us now. Steve, welcome to the program, sir. I was reading through your outlook. If you're not a fan of chess, move on to the next election outlook, clogging up your desktop or your mobile phone, your smartphone inbox. I carried on reading. You said we're playing chess and not checkers. What do you mean by that, Steve?
Well, yeah, checkers is more of a short-term game. You're kind of playing one move at a time. In chess, you're playing 2 or 3 moves forward. And I think a lot of folks think Trump is playing checkers. I think some of them think he's not capable of playing chess. And if you just take the other side of that debate and argue that he's playing 2 or 3 moves down the board and think through what those moves might be, you can go down the whole list of his policies and come away thinking, gee, this is actually going to be pretty positive. So if you're a longer-term investor like we are, you know, we think the S&P probably gets to 7,500 by the end of 26. So, we think we've got a pretty good agenda here. And you can go chop your way down the list and see a positive outcome.
Well, Steve, let's go through the list. Tax cuts. You indicate focus on the growth and not the deficit. Tariffs, you suggest focus on the growth and not the inflation. Steve, can we sit on tariffs? Why do you think there could be a positive growth impulse off the back of that story?
Well, he is clearly here playing a chess game. I mean, he's pretty much said that, and he's negotiating, and I think people get that. So, the folks that argue that tariffs are just absolutely negative and inflation causing, they're playing checkers. They're just multiplying the amount of the tariff times the volume of goods being imported, and they feel that just carries through to inflation in effect. Trump is playing more the game that let's negotiate this deal and equalize the playing field. And the outcomes of all those things, if they work, we'll see, should be to bring more manufacturing back into the U.S., which is growth stimulative. It should bring in more volume into the U.S. He's going to get on the other side on deregulation, which is part of the picture. He's going to get more LNG exports. He's going to bring down the price of oil. That'll offset some of the price increases you will get with tariffs, but you won't get them all. The Chinese manufacturers, like they did the last time, will absorb probably a good hunk of the tariff increase out of their profit margins rather than raise price. They don't want to lose their competitive position. So it's not as simple as just multiplying the tariff times the volume. It's something a little more complicated. And my guess is he'll end up with more investment in the U.S. economy. We're already starting to see people move the piece on the board for that purpose. You're already seeing companies ahead of Trump starting to do that. So, you know, I think net-net, it's probably growth positive, not growth negative.
So in this chess game, you lose your bishop, but it perfectly positions your rook. And if you lose your queen, it perfectly positions your horse to basically boost growth, not the deficit, boost growth, not inflation, and essentially create a lot more opportunities that get the equity market, the S&P 500 to 7,000 by the end of next year and 7,500 by the end of the following year. I'm just wondering, at what point the one niggling feature on the other side of the board is the bond market that could potentially curtail some of this enthusiasm.
Yeah, I'm thinking about another piece, Lisa, you know, like the double put. And one thing that long-term equity investors have going for them here is there are some boundaries on both sides of, you know, potential tails here. So if, for instance, you know, the Republicans go so crazy that the deficits look like they're going to go through the roof, you have a Liz Truss moment probably in the bond market. You guys have been talking about this. And so I think to a certain extent, the bond market kind of disciplines how far they can push some of their agenda. And on the other hand, you know, the Fed's on the other side. You know, if things slow down too much, the Fed just eases more. They've got lots of room to do that. So the stock market has these two, you know, guardrails in effect that I think on a long-term basis make it pretty attractive for investors. It doesn't mean there's not going to be volatility. And, you know, we keep a little cash on the side. We're a little overweight cash today, very modestly, but we always keep a little cash on the side in this kind of environment for opportunities. I mean, Target getting crushed 20% today. You know, not huge fan of Target, but we like it in some of our dividend portfolios. We'll be adding to it here. I mean, it's, you know, it's a little bit overdone. So you're going to get volatility like this for different reasons over the next couple of years, and those will be opportunities. But we think, you know, we're going to end up in a pretty good place, I guess.
You can shrug off if you're the broader market Target as basically a one-off for losing to maybe Walmart or maybe just overdone. If NVIDIA were to report earnings like this, as John was mentioning, it would be a huge problem. That we'd see a much different response, especially given how much the markets have really coalesced around the AI theme. How much do you think that can keep performing, that they has to keep performing in order to keep this chessboard as advantageous as you see it?
Well, they don't have to keep performing. They have to just not get completely destroyed. I mean, NVIDIA's got a very good story, right? They're a monopolist selling to very well-funded customers who have an existential risk if they don't buy NVIDIA's products. For longer-term investors, the debate on NVIDIA is, are they selling razors or razor blades? And, you know, that you got to believe they're selling razor blades. That's sort of the bull argument on NVIDIA and why you would pay 30 times, you know, 3 years out earnings for what's going to be continued double-digit growth because of what they're doing. Everyone knows the story. I think it's pretty positive. But NVIDIA could drop 20%. We've seen it before, and the market advance. Remember, 65% of the market is outside the Mag 7. And if you do get a broadening out trade, which we see as highly likely in this Trump pro-growth agenda that we're about to implement in a pretty aggressive way, that's a broadening out agenda. It's good for some of these value stocks, the financials. It's good for smaller cap companies. I think that case has been pretty well made. And so, you know, if you get 65% of the market go up 20% and 35% of the market kind of hold water because it's got pretty good fundamentals, you can get the market higher, Lisa. I mean, 7,500 sounds like a big number, but it's roughly low double-digit returns. It's not crazy over the next couple of years. So you can get plus 10% in the stock market out of that kind of dynamic.
Stephen, picking up on the Trump agenda, I know you don't think that tariffs are going to be as harmful as some economists have projected, but if we go back to the first iteration of the Trump administration and they used tariffs, basically the impact was in response from China is that they were no longer going to buy some American agricultural products. And then we had billions of dollars in a bailout for farmers. What do you see for Trump 2.0 in terms of that reciprocity from some of these adversaries who might be putting up the walls for?
Well, LNG. The U.S. has a huge amount of natural gas. It's actually one of the more eco-friendly carbon products, and we've been holding back our LNG and our gas production under the current administration. So that's going to be one of the areas that he's going to trade here. He's going to have the Germans stop buying their LNG from Russia and buy it from the U.S. That'll be part of the trade, I guess. And perhaps even China, who import a lot of oil right now from Russia and from Iran. So there's things he can get done here that would be a natural quid pro quo, if you will, or trade-off that could be pretty positive for the U.S. economy. We employ a lot of workers in the gas, in the oil space. So,
Steve, just before you run, year-end 2025, the S&P, what's the target?
We're at 6,600 to 7,000, Jonathan. I like to focus on the 2-year thing where I got 7,500. I don't know how we got this year. This year we got a lot closer to our 2-year target in 1 year. So who knows? But somewhere up there in the high 6,000s.
We've moved quickly. Steve, appreciate your time, sir. We'll catch up again before the holidays. Stephen North there of Federated Hermes with an update on stories elsewhere this morning with your Bloomberg Brief. Here's Danny Berger. Hey, Danny.
Hey, John. The U.S. will provide Ukraine with landmines to stop Russian troop advances. It's the latest effort by the Biden administration to support Ukraine ahead of President-elect Trump's inauguration. The mines will be non-persistent, meaning that they will be inactive after a preset amount of time. California voters have rejected a ballot measure to raise the state's minimum wage to $18 an hour by 2026. It would have been the highest in the country. Supporters said that it would have benefited 2 million workers, like hotel and grocery employees. Opponents of it, though, including the California Chamber of Commerce, said that it would have increased costs, leading to higher taxes and push businesses to eliminate jobs. Netflix's Jake Paul versus Mike Tyson boxing match attracted more than 108 million live global viewers. That makes it the most streamed sporting event ever. The match peaked at 65 million concurrent streams. The news pushed Netflix's stock to an all-time high to a closing price yesterday. And that's your brief, John.
That is a game changer for sports worldwide, that's for sure. Danny, thank you. Up next on the program, all aboard the Trump train.
I do think that it's going to be difficult for anyone to get in front of the Trump train with respect to tariffs. You're not going to find many people out there that are willing to put the sort of tariffs in place that President Trump ran on during the election.
You might have found one. That conversation's up next from New York. This is Bloomberg. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
We've got to keep bringing your attention to what's happening with Target. It is down in the pre-market by about 18%, cutting its outlook, missing guesstimates, pretty dreadful stuff really, and having problems with inventory. The broader market's still doing okay. Equity futures on the S&P up by 0.2%. Under surveillance this morning, all aboard the Trump train.
I do think that it's going to be difficult for anyone to get in front of the Trump train with respect to tariffs. You're not going to find many people out there that are willing to put the sort of tariffs in place that President Trump ran on during the election. We're in a situation now where Trump inherits an economy where nominal growth is generally slowing down. So if tariffs are put on imported goods, I'm not sure which goods those would be, the prices for those goods would rise, but the prices for other goods would be coming down.
So here's the latest this morning. President-elect Donald Trump naming Cantor Fitzgerald's Howard Lutnick as his pick for Commerce Secretary, giving him an expanded purview over trade, tariffs and policy. Sources telling Bloomberg that Trump is in Florida today interviewing potential Treasury Secretary picks Kevin Warsh and Mark Rowan. Joining us around the table is David Malpass, the former president of the World Bank. David, good morning to you, sir. First question, got to address it. Have you been down to Mar-a-Lago to interview?
I was down there last week and met with people. You know, Trump has the opportunity to put in really good people across the government, and I think that's the process. And it's happening quickly, much faster than in 2016, so I think that's great.
Were you down there for anything specific? You were part of the Trump administration. The first iteration started out Treasury, ended at the World Bank. What potentially could you see your role in Trump 2.0?
That, you know, I want to be helpful and doing that as I can. As I say, there's huge problems that need to be solved. If you think about where the U.S. has been left here at the end of the Biden administration, it's weak on foreign policy. It's got the economy still suffering from the inflation, the persistent inflation. The bank regulatory policy is really mixed up. Energy is not doing what it could be. So there's all these problems to fix, and I think there needs to be lots of people to do it.
So you're in the mix when it comes to the direction of policy. Can you talk to us about how do you see the direction of policy in Trump 2.0 when it comes to things like tariffs, given the fact that if personnel is policy, he put what we've envisioned over the course of the campaign, a tariff hawk in charge of commerce. That individual did not get the nod for Treasury that he wanted, Howard Lutnick. But with this commerce appointment, the statement said he'll have more of a role in USTR as well.
We have to look to how the president phrases it and what he wants done as far as who's pushing forward the agendas. This idea of commerce and USTR being attached is a long-standing one. I worked for Senator Roth in 1990 when there were the actual proposals to merge them because of their overlapping roles on tariffs. And so that's not new. But there's so much to the whole agenda. Think of what has to be built out in terms of downsizing the overreach of Washington. All these people that are employed to write regulations that slow the economy, there are better ways to do that, and that's one of the major initiatives. Another one is on energy. Think of the strength of the team that's been put in place with Chris Wright, with Burnham, Governor Burnham, and with even Lee Zeldin. EPA is going to be an important part of it. And so you've got the core of the team that can really create energy growth for the U.S., and that's good for everybody in terms of affordability.
Okay, maybe the core, but the nucleus of this team we are missing is a Treasury Secretary. And right now there's 4 names. Maybe we would even say it's coalescing around 3. Scott Bessent, Kevin Warsh, Mark Rowan. 2 of them will be in Palm Beach today for interviews. Do you have an idea of what the president is looking for when it comes to his Treasury Secretary?
No, I don't have insight on that. He wants really good people that are going to get the job done and get it done fast, and that's pretty reasonable.
And what do you think of these three individuals we're showing right now?
They're good people that can get the job done, get it done fast. You know, the tax bill is going to be needed right off the bat. So as you look into 2025, I did that Wall Street Journal article on the fiscal train wreck, or it's really a perfect storm coming together. You've got to get the tax bill done. You've got to get a budget out really fast. You've got the debt limit coming at you, and it's a very difficult one because you've got to get your party to vote for increase in the national debt. That's always a sticky one, has been for 30 years. The reconciliation bills will be challenging, and all of that has to come together with the clock ticking in terms of market confidence. You want to build the confidence in markets as you go forward.
So this is the reason why a lot of people are saying that in the first administration for Donald Trump, the stock market was the ultimate check. In this administration, it's going to be the bond market. How do you create both the growth that the stock market is expecting and the fiscal discipline, or at least lack of complete irresponsibility that the bond market is looking for, with that kind of sequencing deadline and the different internecine politics in D.C.?
I think it can be done, but that goes to this core of the models. You know, if you use a Keynesian model, you say, well, if you shrink the fiscal deficit, it will slow the growth rate of the economy. You've got to really break out of that and say, no, if we're shrinking the size of government spending, that frees up the money for the private sector, so you get faster growth. And so it's almost the opposite of a Keynesian model. And it's the same with the Phillips curve. You know, the Fed is so dependent on this idea of the offset between employment and inflation, but it doesn't work that way. If you've got confidence in the dollar as the reserve currency, you can get low inflation and that price stability. That's your dual mandate, and then you get full employment out of that. So the various tools or levers work together, not against each other.
What's fascinating to me is to hear your perspective on this at a time when you used to be the president of the World Bank, and so you had a very clear sense of the international perspective. And back in the APEC and in the G20 in South America, there was this feeling of, who cares what's going to happen here, because it doesn't really matter, everything's going to change. Do you get the sense that this president is going to care about kind of where the U.S. lands in the geopolitical landscape here?
I hope so. The U.S. has gone way too far into globalism, and you saw that on display over this last week. Where you were in South America. You see these giant conferences going on where there's no useful outcome, and where the U.S. is embarrassed by its position within the world. China is dominating in those international conferences. So I think there has to be a real rethinking by the new administration of how do you want to interact with the world. That applies to trade. That applies to how do you work with the IMF when the programs aren't working. You know, look at the Argentina debacle and on down the list. And that means the U.S. looking for its national interests more clearly than what we've been doing. There's almost been this view and action to say we want to give power to institutions that are headquartered in Europe because they're going to be socialist. And that, I think, really has to stop.
Do you think it can change?
Yes, certainly it can. The U.S. is, you know, the dominant world economy. People forget that. 25% of world GDP, totally powerful. It's just been absent, you know, so there's the vacuum in the world. Look at it in Africa with the weapons flowing down from the north. Russia's putting weapons not only into North Africa, but into Gaza, into everywhere you can look, into Syria. And China then is building the infrastructure and the pipelines and putting on the debt. So it's dominating. In the U.S., you know, France is long gone, and the U.S. is getting pushed aside. That's the base closings in Niger, the loss of Sudan, and the Houthis not being able to be controlled. So the weakness of the U.S. is on full display to the world. That was particularly apparent in Lima with the conference there.
David, we've got to go. It's good to see you, sir. Thank you. David Malpass, the former World Bank president, with some very important points at the end there. Up next on the program, Target getting absolutely hammered.
begins the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg. Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Two big earnings stories. Target out a little bit earlier. Later on today, you'll hear from NVIDIA after the closing bell. We'll get to Target in just a second. Equity futures right now on the S&P 500 up by 0.2%. With your morning movers, here's Manus Cranny. Good morning, Manus.
Jonathan, a very good morning. 24 hours ago, we were talking about Walmart, broad-based strength. Today, I give you Target, wiping out this year's gain and some. We're down almost 18%. Flat sales, a lackluster guidance. We are resourceful and strategic in the purchases that we're making at Target. This is, of course, we're judicious when we go into Walmart, but they are sucking up the middle class, those people, those hardworking people that go into Walmart as well. The breadth of what Walmart are taking in is taking market share. That's the basic understanding that's going on in Target. Full year, $8.30 to $8.90. That's way below the original estimate guide of $9 to $9.70 from the market. Let's roll it over. Yeah, there's a little bit better footfall, and digital is improving. Comcast. Remember 2011? They got their hands on NBC. The crown jewels were the cable assets. MSNBC, CNBC, USA. Now, they're hiving those off. They spin off. They floated this idea in October. Today, we understand they will confirm it. They will spin off the cable assets, $7 billion in annual revenue there. And what will stay in the family is Peacock, broadcast TV, sports, movies, and theme parks. And housewives. Real Housewives. That stays in the family. That makes a few dollars. MicroStrategy, inextricably linked to what happens in Bitcoin. Bitcoin's at the bottom of your screen, breaking through $93,000. But again, it's what is Michael Saylor doing at MicroStrategy? Not only is he adding another 51,000 Bitcoins on Monday, but he's actually offering more convertible stock to embolden his capacity to buy more. This stock is now worth as much as Barrick Gold and Newmont Mining. $97 billion in actual market cap. That's what you call heft and outshining gold.
Manus Cranny, thank you, sir. Comcast, big story. CN, never heard of them. Is that the marketing unit of the Dow Jones? Is that what that is?
Wow, you're really going to go
do?
there. Honestly, all I could say is it's going to be an interesting time. I'm not going there. You're going to try to put this on me?
It's all right. I can go to NVIDIA now.
Thank you.
Under surveillance this morning, investors are waiting NVIDIA earnings after the closing bell. Its forecast expected to show whether the world's most valuable company can continue to deliver on AI demand. Revenue expectations span roughly $8 billion US, reflecting analyst uncertainty over chip supply. That stock this morning is up by about 0.5. It's flying already so far this year. If you missed this a little bit earlier on the program, I'll repeat it again. It came from Gonzalo Assis over at Bank of America. NVIDIA earnings matter. It remains the most dominant stock on the market, driving 20% of S&P 500 return over the past year.
And the earnings have backed it up, and the beats and the expectations have backed it up even more so. Steve Hoth was on earlier at Federated. I know you did the same calculation that I did. He said it could fall 20%, and it would be just fine. That would be $720 billion erased from stock market valuations in the United States. And he's saying, well, everything else could take over. There is a bigger existential question that I think needs to be answered by NVIDIA. How is it being deployed? How internationally is it being deployed? Can they meet that deployment? And do you have the same kind of investment in the coffers of some of these big hyperscalers to continue, even if they're not necessarily quickly showing profitability?
Dan Ives says the recipe for success here and what the Wall Street wants to see is another $2 billion beat and $2 billion quarter guide higher. He says that's the recipe. Then you look at what HSBC puts out, and they say it's entering uncharted territory because it continues to grow on a $3.5 trillion market cap. This is ginormous. And whatever NVIDIA does this afternoon, I think will depend on what the stock market as a whole does tomorrow morning.
We've just seen this on repeat. Beat and raise, beat and raise, beat and raise off a bigger and bigger base, and they keep doing it time and time again. That stock is up by 0.5%. Elsewhere, the search for President-elect Donald Trump's Treasury Secretary continues. Sources telling us here at Bloomberg he's expected to hold interviews today with former Fed Governor Kevin Walsh and Mark Rowan of Apollo Global Management. On top of that reporting, Anne-Marie, what is the latest?
So that is the latest. We're going to get these interviews today. So potentially in the next 24, 48 hours, we could have the final pick for the Treasury Secretary. And then whoever's the Treasury Secretary, we're going to want to know who's going to be the NEC director. Last hour, I gave an idea of speculation of potentially you have Walsh at Treasury, then he goes to Fed in 2026, Bessent at NEC, then he goes to the Treasury in 2026. Or there's another 3D chess, potentially. This is all speculation, and people are also writing in, speculating what they think as well. Given the fact that Howard Lutnick is now out of the running, and he's been given a home at Commerce, does this potentially mean that Scott has a chance to rise to the top over these two individuals that are going to be meeting with the president today? We'll wait to see.
I love the excitement as we go through the blow by the latest in the show.
Sounds like the preview of the second episode in Succession or something like that.
Well, it kind of is. That's what we're looking at right now. I think there is this larger question for markets. What are the checks and balances going to be? And if you do get ultimately fiscally less dovish, I don't want to call it hawkish, since last time you did highlight the sort of irony of saying that, then what does that do to some of the market expectations for animal spirits, as well as, you know, the joy that you might see, the relief in the bond market?
We've said it on repeat on this program. The biggest regulator in Trump Term 1 was ultimately the Dow Jones. This time, it could be the bond market. We've heard that from Julian Emanuel of Evercore, Ed Mills of Raymond James, from Steve Orth of Federated, in just the last 90 minutes alone. Everyone on the same page on that front.
I really think that this is going to be the year, next 12 months, make the yield curve great again, and I think we're going to see it again and again.
Possibly. Trump also appearing alongside Elon Musk at a SpaceX Starship launch in southern Texas, the president-elect's first time attending such an event. Allies including Senators Bill Hagerty and Ted Cruz joining the group at a viewing location about an hour before liftoff. This company very much in focus. We've spent tons of time, mainly because it's a public company, on Tesla and the halo effect that comes from that relationship between Elon Musk and Donald Trump. Not enough time talking about this.
About actually, this was successful, even though there wasn't this cupping effect that they wanted to see. This was a successful launch. We will see a number of launches. I know everyone's focused on the rockets, but for me, it was the second you texted me and you said, look, I think that's Senator Hagerty. He was there. And we've seen the president make decisions about personnel when he was with people on planes, which is why it was interesting to see him tag along to this rocket launch when he was supposed to be having an interview that morning with us.
That's what happened in the next episode of Succession. Just hold on. But in the meantime, the idea of satellites and the idea of some of the architecture for the communication system and defense system that this actually brings, to me, is fascinating.
I've got a lot of time for the senator from Tennessee. It's a great guy. It's a fantastic guy. Let's turn to shares of Target, plunging this morning. The company cutting its earnings outlook for the year as shoppers spend less on non-essential items. That stock is down 18% in early trading. Chuck Grom of Gordon Haskett joins us now for more. Chuck, this was a shocker. What went wrong over at Target?
Yeah, I mean, it is a shocker, but it's more below the top line that was a surprise. The top line comps up 0.3%. That was pretty much where the buy side and ourselves, we were modeling 0.5% of an increase. Came in, traffic was strong, digital volume was strong. It's really on the gross margin line for them, and it appears to be inventory related, supply chain related. In other words, it seems more company specific than industry related, and we'll find out over the next couple of days. We're going to get a lot of reports. We just got TJX that just hit. What the numbers were actually very strong, more in line with what we heard from Walmart. But don't get me wrong. I mean, company guiding down 9%, stock indicated down 16, 17%. My gut, that looks like a little bit of an overreaction. Don't get me wrong. Stock needs to be down today. But we'll find out on the 8 o'clock call what's really going on here. And zooming out, like it's important to keep in mind that Target's had issues that are very company specific in the past. They tend to have issues with inventory management, supply chain. My initial reaction is it looks like something like that we've seen in the past from them.
Chuck, it took me back to May 2022. I'm sure you remember that well. The stock cratered on that earnings report as well. Chuck, what's the difference between the challenges they face now and the problems they had back then coming out of the pandemic?
Well, first of all, you have a great memory. Second of all, I think what's going on here with Target is, you think about Target, it's about expect more, pay less. I don't think they're focusing enough on the expect more side of the equation, and I think they're focused too much on price. It's hard to battle with Walmart and Amazon and Costco on price. They're known for their fun merchandise to differentiate in apparel and in home, and I don't think they're doing a really good job with that right now, and that's evidenced of a 0.3% increase in their comp relative to Walmart, who just printed a 5.3% yesterday.
So expect more is doing a lot of heavy lifting here. Are you talking about a product mix that they need to have higher end goods? Are they talking about what areas they're trying to target? Because that's what it sort of is screaming to me when you say maybe less on the price.
Yeah, I just think that they're known for their exciting product, and whether it be private brands or whether it be national brands, they've got great partnerships with Disney, with Ulta. On Black Friday, they're going to have a big Taylor Swift offering. I just don't think they're doing enough of that, and that's where, you know, if you look at their comp, their general merchandise business has been soft, and that's the area that tends to be margin accretive for them.
At this point, Chuck, I just wonder how much we can extrapolate a larger story here of Walmart gaining share or pressuring all other retailers that are in the same kind of bucket due to their multifaceted business strategy, the fact that they have the offsets of advertising, of their media, of their marketplace, of their online unit that can allow them to win on price. And then it forces everybody else to scramble. Are we going to be seeing that in all the results from all the retailers?
I think that's going to be the case when you look at the results at the low end for Dollar General and Dollar Tree. I think in particular they're under a lot of stress from Walmart's second P&L, which is, to your point, is funding a ton of price investments. And if you think about it in a baseball game analogy, we're like in the first inning of that. So that's not going to get easy. I think when you zoom out, a 1% comp move at Walmart is roughly $1.2 billion. A 1% comp move at Target is $200 million. A 1% comp move at Dollar General is $100 million. So it's just a comp number for Walmart, but the market share, when the pie is not growing, is just simply magnificent what they're doing right now. And we're buy rated on them. We like them. We've had a buy rating on Target. Obviously today hurts. It's a cheap stock. Again, I think the issues are more company specific than they are sector specific.
Chuck, when it comes to the sector, though, we have the dock workers union suspending that strike until January 15th. Then, of course, we have this lingering potential for tariffs. How are the retailers going to be preparing for those two events, considering the fact that Target potentially overshot here when it looked at their stockpiling, and given the fact that that port strike was relatively short?
Yeah, I mean, most of the companies we talked to back in October were thankful that it only lasted a couple of days, and I think the rule of thumb was every day of a strike was about a week of backlog and inventory. So we'll see what happens on that front. And with regards to tariffs, I mean, most of the companies are better prepared today than they were 6 or 7 years ago. That's not to say if it's a meaningful increase in tariff prices, you know, how they're going to deal with that will be interesting. It just seems very inflationary to me. And if President Trump-elect wants to be mindful of that, then raising tariff prices across the board, there has to be an offset. So more to come, and we'll obviously learn more over the next week with a lot of earnings here in retail.
But do you see those retailers preparing now for things like tariffs down the road?
Well, I think the one area you will see companies prepare for potentially is accelerating inventory receipts in quicker and earlier. And so I think that's something that retailers will prepare for. And as a result, working capital will be deprived here in the fourth quarter because inventory balances will be higher at the end of the year.
We've asked a few guests about this. I'd love your recollection of what happened maybe 8 years ago, 7 years ago, when we had that first trade war between China and the United States led by Donald Trump. What changed for many of these retailers? Have they changed where they source, where they get product from? How much has changed?
Oh, lots changed. I mean, a lot of companies we cover, you know, Floor & Decor just comes to mind, who, you know, 8 years ago, they were sourcing 50% of their inventory from China. Last year, it was 25%. This year, it's probably closer to 15%. So companies are moving everywhere they can, and I would anticipate that will accelerate next year.
battle-hardened. Chuck, appreciate it, sir. Thanks for joining us this morning. Chuck Grom there of Gordon Haskett. Weighing in on what's happening here with Target. So Target's down by close to 20%. Just to go back over what Chuck was talking about there, an industry problem or a single name problem? If you look at the industry, Walmart, beat and raise. TJX, just moments ago, beat and raise. Miss and cut over at Target. Just looking at that, and it's early days, you just take a step back, you just look at those three things, sounds more like a single name problem than an industry problem.
And he's saying expect more, pay less. They're talking about pay less a little bit too much and not the expect more, and that maybe it's the product mix that they need to focus on and offering more interesting brands and things of that nature. So watch what's in this space in the next, in succession, Target style.
Stock is down by 18% in pre-market. Not a good episode for them at all. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Danny Berger. Hey, Danny.
Hey, John. A key gauge of Eurozone wages jumped 5.4%. That's the most since the euro was introduced in 1999. It comes as the ECB hopes to normalize rates and grapples with potential new tariffs coming from an incoming Trump administration. The ECB's Louis de Guindos spoke to Bloomberg on the threat.
Trade distortions, at the end of the day, can give rise to a sort of vicious circle. If they derive into a sort of trade war, that could be extremely detrimental to the world economy for both growth, mainly for growth, but as well for inflation and for asset valuations. And I think that this could give rise to an additional negative impact to the situation of growth.
Elsewhere, Japanese Prime Minister Shigeru Ishiba has reached a deal with a key opposition party on his economic stimulus package. The Prime Minister has vowed to include tax cut proposals among the measures. The stimulus package is set to provide more money to low-income households and reinstate subsidies for electricity and gas bills. Tesla chair Robin Denholm cashed in on Tesla's post-election surge. Regulatory filings showed that she exercised stock options that were set to expire next year and sold the shares on November 15th. She netted about $32.5 million from that stock sale. The EV maker has been one of the best performing stocks after President-elect Trump's victory. That's your brief, John.
Danny, thank you. More from Danny in about 30 minutes' time. Up next on the program, Trump's Secretary of Trade Tariffs.
At the turn of the century, our economy was rocking. We had no income tax, and all we had was tariffs.
I think we can all go with the no income tax stuff. We're all on board. From New York, their conversation up next. This is Bloomberg.
In case you missed it, on Bloomberg Technology.
We are very focused on playing one game and one game only, and that is being free, frictionless entertainment for consumers. But what I will say is we are doubling down on the strategy. We believe it's working. We think the tailwind's in our favor, and it's on us to continue to deliver.
Whenever you're doing something innovative that hasn't been done before, there's a lot of trial and error and iteration. It just always has these zigs and zags along the way, and I think where we've been successful is really being reactive.
Hollywood is the history of technology. Like, we are here because of a technological breakthrough, right? And so we sometimes forget that art and technology kind of like come together always. And for us, it's like demystifying a little bit the technology. Again, if you understand AI as a tool for humans, then it changes the narrative. And it's less about fearing it and more about embracing it.
Don't miss Bloomberg Technology, live every weekday.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Equities on the S&P 500 look a little something like this. We're still positive by 0.2%. Yields bleeding just a little bit higher, up by 3 basis points. The 10-year, 442.57. Under surveillance this morning, Trump's Secretary of Trade Tariffs.
At the turn of the century, our economy was rocking. We had no income tax, and all we had was tariffs. We took down our protection. We took down our tariffs. And we turned instead and we taxed Americans. We're letting the rest of the world eat our lunch.
So here's the latest this morning. President-elect Donald Trump picking Howard Lutnick to head the Department of Commerce, leading the tariff and trade agenda for the incoming administration. Chazad Kazi of the China Beige Book writing, the president has nearly unrestrained authority when it comes to levying tariffs, and a Republican-dominated Congress will not be standing in his way. This means the Trump team can move very quickly on a package of big China tariffs. Chazad joins us now for more. Good morning to you, sir.
Morning.
We've seen this movie a few times. We think one person's in charge, but ultimately it's Donald Trump. When I joke about the Secretary of Trade tariffs, does it just belong to Donald Trump? Is it all top-down for you?
Yeah, absolutely. This is absolutely top-down. It's what the president wants. And as we know, he will yell out to the staff, go get me tariffs, right? And then they work on putting together the executive orders that meet what the president wants. Will there be debate, discussion, fighting? Maybe a little bit of fighting this time around as well. But everyone will be ultimately, I think, have to bend to the will of the president rather than the other way around.
One thing we're grappling with in markets is drawing a distinction between campaign promises and legislative reality. How much daylight is there between a campaign promise and what you think the reality will look like in the coming year?
Well, look, at the outset, reality could mirror the promises, right? Because President Trump might want to make a big splash and come out and say, look, we're gonna go 50% tariffs on everything China, and yes, we're going to do 10% global tariffs. Now, does that actually what he runs with? Ultimately, when the orders are written and when we start getting policy on paper, that's up for debate, and that's, I think, what the markets are going to be having a very hard time marrying what he says when he gets in front of the cameras versus what actually ultimately.
When we talk a lot about personnel is policy, and right now it looks like Howard Lutnick is giving a lot of scope to run the trade and tariffs. Trump in 2016 really put that with Wilbur Ross. And then at the end of the day, it was actually Robert Lighthizer where all the power lied.
Because if you're having to spend more money just to cushion the blow from tariffs, essentially maybe running in place at best, that's just stability. That's not really going to propel the economy into higher gear. But I think they're certainly taking a step back. They want to see what the damage is going to look like before they tell you how they're going to take care of it.
Well, that's what everybody's been saying. And then they came out with something that was sort of a bazooka, and then people got disappointed and said, just wait, they'll come out with something more. What is their capacity to respond? And is it internal stimulus, or is it further tariffs on the U.S.?
further tariffs, retaliatory tariffs is part of the approach that they will take. They could even figure out a way to go after certain American companies to punish specific entities. But that said, they have the capacity is not the issue. It's what they want to do. They don't want to do big household stimulus. They don't want to have the housing market reflate again. They want to do risk mitigation. That's why you're seeing a lot of focus on paying down debt at the local government level or moving the debt to balance sheets, to the center's balance sheets and so forth. So it's stability, it's risk mitigation. It's not this big bazooka-style stimulus that the street keeps telling you is going to happen and just doesn't happen.
There's also this question of the method that they've used to try to boost their economy, which is production. And some people might say overproduction of certain goods, and that it needs to be exported because they're having overcapacity for certainly their population. What does it do to the balance of exports if the U.S. effectively puts up walls of tariffs?
Well, first of all, there's a lot of rerouting of trade. So we have to keep that in mind. This is not like 2016. A lot of trade has been, as a matter of fact, rerouted. So we could see the Chinese export machine still doing all right because it's coming out of, ultimately, the goods are coming in through other jurisdictions into the United States. The other side, by the way, of China saving its firepower for next year is that if they just keep making policy easier and providing a lot of money to their manufacturers, to their commodities producers, it could actually exacerbate the very problem that Trump and company want to address. You could still have Chinese goods flooding the market because back home, Beijing is taking care of its factories.
You used to have this word decoupling, and that became a really bad word, naughty word, particularly if you were Janet Yellen and the Treasury Secretary. Then this other word came in, de-risking, but you couldn't use that one either. You had to say diversifying. How have they diversified with a presence in the United States and China? How have they diversified?
So China plus one is being talked about all the time. That's another cliche. But my concern always is you can do China plus one maybe for lower end goods. But what do you do if you're Apple? What do you do if you're complex pharmaceutical products or medical equipment providers, where there are just no other countries where you can go today and produce those products? And so China plus one, I think, is limited.
Because of knowledge and not because of the price of labor? You think it's knowledge?
Price of labor, I don't think, is the main driver anymore. It is the infrastructure is already there, the knowledge is already there, the know-how is already there. It's going to take a long time to retrain workers elsewhere.
How well understood do you think that is when you speak to people?
I think corporate CEOs have probably tried to explain that to policymakers, which is why you're getting policymakers perhaps not talking about it as much. But it needs to be done, I think. That's my personal opinion, but it's going to be complicated.
This is really important stuff. You can't just flick the switch and move somewhere else.
Have you seen what goes into some of these manufacturing plants for solar panels? Talk about semiconductor chips in Taiwan. It is such a complicated process. People are trained for years to be able to do that. There's an entire training ecosystem around that that's very hard to replicate.
Which is what should have happened in this country a long, long time ago and ultimately did not. Shehzad, it's good to see you. Thank you, sir. Shehzad Kazi there of the China Beige Book on the latest tariff effort, what the next year looks like and how China might respond. Up next on this program, we'll catch up with Tracy McMillan of Wells Fargo. We'll speak to Pierre Ferragu of New Street Research as we await numbers from NVIDIA after the closing bell. Matt Lazzetti of Deutsche Bank, and we'll speak to Vishal Kanduja of Morgan Stanley on the latest in this bond market and why it might be the ultimate regulator of whatever policy comes out of the White House. We've heard that a few times so far this morning. Equity futures on the S&P up by 0.2%, target down and down hard by 19%.
In recent years, you created an institute, the Jane Goodall Institute, and what is that designed to do?
Well, that was started in 1977, when by then I had a little research station, and 4 of my students were kidnapped, and everything shut down. And so some friends of mine said, well, let's start an institute so that this research can carry on. Bless them. So that was 1977, and it was set up to study.
Okay, today I'm going to talk about how to succeed with a startup. Obviously, more than can be said here in 20 minutes, but I will do the best I can. The most important thing, the number one lesson we try to teach startups is that the degree to which you're successful approximates the degree to which you build a product that is so good, people spontaneously tell their friends about it. Startups always ask us for the secret to success. They always want to believe it's something other than this, because this is really hard to do. But this is it. If you can build a product that is so good, people spontaneously tell their friends about it, you have done 80% of the work that you need to be a really successful startup. If you think about the most successful companies you know, Google, Facebook, whatever, you probably found out about them because a friend of yours said, you got to try this, it's great. So this is the bar. Something that people love so much they tell their friends about it. One important indicator for a product like that is a product that's simple to explain and easy to understand. If you can't explain in a few words what you do, and if at least some people don't say, oh, that's pretty interesting, that's usually a mistake. It's usually a sign of unclear thinking or a need that is not big enough.
I want a bank that shows me what I spend instantly.
We're Monzo. Give us a go. See?
I want a bank that can help me budget for the things I need, like a new leather jacket for Bingo.
We can do that.
Bingo's my cockapoo.
Hi, Bingo.
It's a real faff to sign up.
It takes less than 10 minutes.
Race you.
You're on. Time's up. How'd you get on?
It's a draw.
Is it? We hear you, Bingo. You make Monzo Monzo.
Hi, I'm Laurie Haynes, CEO and co-founder of Shirar, and I'm really excited to tell you that we are going to be raising funds for Shirar again. After a successful raise in 2023, it's time to scale.
We hope that you enjoy the pitch deck and the financial model. Any questions, please don't hesitate to ask us, and we can't wait for you to be part of Shirar.
I will show you how to get the best funding for your startup idea. Let's get started. Here's the deal. If you have an amazing startup idea and need funds to fuel it, we're here to help. Simply send us a video where you explain your idea. Make it clear, concise, and compelling. Hook us in with your passion and vision. Don't forget to include your contact details so investors can reach out directly. This is your chance to shine and get your idea in front of people who can make it a reality. Imagine turning your startup dream into a thriving business. It all starts with that one simple step. So what are you waiting for? Grab your phone, hit record, and let your idea fly. The future of your startup could be just one video away. Remember, be clear, be passionate, and most importantly, be you. We can't wait to see what you've got. Let's get funded now.
Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
The third hour of Bloomberg Surveillance starts right now as we count you down to the opening bell. 90 minutes away. Equity futures positive by 0.2% on the S&P. On the Nasdaq 100 up by 0.25% as we await numbers from Nvidia. Numbers from Target dropping a little bit earlier. And that stock drops a whole lot. We're down by 18% on Target. We had a beat and a raise from Walmart, a beat and a raise from TJX, and a miss and a cut from Target this morning.
Fool me once, maybe people can move on. Fool me twice, and then it becomes a chronic problem. And that's essentially what's happened when you talk about idiosyncratic issues. The Target points to cause the inventories to build and provide a bigger drag on earnings than they expected. There's some big questions here about how the behemoth of Walmart and some of the other large players are pressuring other companies in the retail space to understand what their business model is and target what works, no pun intended. The idea being that maybe competing on price is no longer the advantage as maybe on product mix.
But given the fact that the company's profit was hurt by the stockpiling because of the ports, is this a harbinger of potentially what other companies might be dealing with when that strike is going to come to a head January 15th? And then even longer down the road, if you start building up stockpiling, you start building up inventory, because why? You're nervous about tariffs. How difficult is that going to be to weigh the policy signals that are coming out of Washington?
Should we be nervous more broadly? Chuck Grom of Gordon Haskett was on the program 30 minutes ago, just after these numbers dropped, and he said this looks like an industry problem. No, it looks like a stock problem. And that's why you're seeing the broader market still doing okay. The enthusiasm and confidence going into 2025. Take a listen to this. We've got BMO at 6,700. Goldman Sachs at 65, Morgan Stanley at 6,500. We spoke to Julian Emmanuel, who's looking for 6,600 in the middle of 2025. Steve Orth, the Federated, said we could push to 7K by the time we get to the end of next year. And the reason why, there's a big focus on tax cuts and deregulation, which is why this cabinet pick matters so much in the next few days. Look at this lineup. Check out the caliber of some of these individuals. Scott Besson, Kevin Walsh, Mark Rowan, Senator Bill Hagerty. We're looking at individuals that could be the most knowledgeable of financial markets that we've seen since Hank Paulson, at a time when this economy is in a much better position.
Absolutely. When it comes to the plethora, the buffet of individuals Donald Trump has to choose from when it comes to these when it comes to Treasury Secretary contenders, each one of these individuals are really experts in their field, in not just markets in the United States, but global financial markets. But they will have a big job ahead of them. One, dealing with Congress on the debt ceiling, day one. That's going to be first order of business. Then it's going to be shepherding Donald Trump's agenda when it comes to taxes. Is it beyond TCJA extension? And then third, pushing back potentially on what Howard Lutnick might want to do when it comes to trade policy at Commerce.
Take your politics out of all of this. Let's say you get Besson at the NEC and you get Mark Rowan at Treasury. We're talking like Pippin Jordan type stuff, like dream team material to run the economic policy of the United States of America.
So if you get the Chicago Bulls lineup from the 1990s in the White House or in the cabinet, there's a real question here about whether President-elect Donald Trump will like that, because whether the policies will actually be equal to what he's trying to put out there in the rhetoric. And I think that's the uncertainty that you're feeling in markets as they look at these picks to understand, is the priority on tariff man or is the priority on the idea of how to create the best mix of policies?
Game of Thrones continues down in Palm Beach, Florida. Coming up this hour, we'll catch up with Tracy McMillan of Wells Fargo as markets await NVIDIA results. We'll speak to Pierre Ferragu of New Street Research on the chip giant's AI infrastructure outlook. And we'll catch up with Matt Lazzetti of Deutsche Bank on why next month's Fed meeting is a close call between cutting and skipping. We begin this hour with stocks higher as investors await earnings from the world's most valuable company, NVIDIA. Tracy McMillan of Wells Fargo staying cautious, writing this: NVIDIA has market-moving potential. Given the sizable post-election stock jump, we want to be a bit cautious over the balance of 24 and into early 2025, but think broader risk opportunities are developing. Tracy joins us now for more. Tracy, welcome back. Where are those opportunities right now?
Yeah, John, good morning. So we think that the opportunities are mostly in U.S. large cap stocks. As you mentioned, NVIDIA will be reporting later today. And of course, they're a bellwether for AI spending. So we will see if the torrid pace of AI spending has held up. If they have another blowout quarter, we think that probably gives investors the green light to continue holding their Mag 7 stocks. So that will indicate status quo. If they fall short, then we could see that roil broader markets, we think.
Tracy, we shared a snapshot of your outlook into 2025. I think it's worth going back over the fact that we're on track for a 20% plus year on the S&P 500 that very few saw coming. When we played out this exercise 12 months ago, looking out 12 months, how much harder is it this time around to provide a forecast, any kind of projection, with any confidence for the next 12 months?
Yeah, so it's actually a bit more difficult, as you mentioned. In fact, a red sweep was not our base case, so we are reformulating some of our forecasts as we speak, because we are expecting probably higher growth and higher earnings due to improving regulatory conditions and the potential for tax cuts. So that does have us rethinking our forecasts.
Tracy, which aspect of it in particular? And this is actually what we've been trying to gauge from a lot of people. And I get a lot of sense that maybe people haven't really determined what potentially could be affected by the policy change. Is it that yields could potentially be higher? Is it stock prices could potentially be higher? Are there certain sectors that you could see upgrading more significantly?
Yeah, so it's very possible that we could see higher yields, higher inflation. higher growth, all of those things combined. So there are certain sectors that we like. We've liked cyclicals into the election over the past few months. We have favored industrials, communication services, energy, financials. We think financials are particularly interesting right now because of the regulatory benefits, the benefits of yield curve, a steeper yield curve and net interest margins, and the potential for additional mergers and acquisitions, which could benefit investment banks.
So Tracy, what do you have to see in order to really make these changes to your outlook? Is it a personnel issue? Is it just you're looking to understand what the market is doing and how it's responding already?
Yeah, there's certainly going to be a lot of things that will play out over the next couple of months and things that are going to play out into 2025 as well, because we don't know a lot of things like timing of potential tariffs, magnitude of potential tariffs. Geopolitical issues are another risk that we've got our eyes on. We also are watching consumers to see if consumer spending starts to pull back as consumers get more price conscious and perhaps more concerned about higher prices relative to tariffs. So a lot of factors go into those decisions, and right now we're still favoring U.S. over international. We like large caps over small caps, and we like those cyclical sectors over more defensive ones.
So you're very much into U.S. exceptionalism, and you're pricing in some of the good things potentially you could see from a red sweep. But what about this idea of tariffs? How much of a bite could that be on corporate America?
Yeah, tariffs are probably going to hit both consumers and corporations. So consumers in the form of higher prices, corporations in the form of lower margins. So it's probably going to be some combination of that. And this time around, we wouldn't be surprised if we didn't see corporations passing on more of those higher prices to consumers because they've seen that they have more pricing power than what they had back in 2018 during the first round.
And your probability is for a soft landing, but you say a recession, we're not out of the woods. What's your probability on potentially recession for 2025?
Yeah, so we think that that's a pretty low probability at this point. We do see some slowing in economic growth. In fact, we've seen some slowing through 2024 relative to 23. We think that slowing continues a bit here over the next couple of quarters, but then we see the potential for a reacceleration in growth rather than a recession.
Tracy, appreciate the update from you. Looking forward to the update again in the next few weeks. Tracy McMillan there of Wells Fargo. Not expecting that red sweep, which is why so many of the outlooks were delayed, because a lot of people had to rewrite certain chapters of them looking out to 2025.
Interesting to think about how much people are rewriting them and how much people aren't. And there seems to be an ambiguity around how much they want to actually rewrite them. As we were hearing about from Tom Kennedy, for example, a lot of it was written before the election. But there's a real question, and this goes to Game of Thrones, Succession, whatever you want to say. What are the applications of some of these policies going to be? And maybe, it actually is prudent to wait a bit.
Everyone's worried about prices going up. This came from Target just months ago. Target to cut prices of 2,000 products for the holidays, according to the CEO.
So I just looked at the share price, and it stayed exactly where it was. So it didn't go up. And it goes to Chuck Grom's point, which is that the problem? Is it prices being too high issue, or is it a product mix issue, or is this them trying to clear the decks so that they can move on? A lot of questions for Target this morning.
Many, and not getting many answers. That stock is down in the pre-market by more than 18%. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Danny Berger. Hey, Danny.
Hey, John. The search for Treasury Secretary continues. Sources tell Bloomberg that President-elect Trump is holding interviews with potential picks Kevin Warsh and Mark Rowan in Florida today. Yesterday, Trump nominated the co-lead of his transition team and once a Treasury Secretary hopeful, Howard Lutnick, to lead the Commerce Department. Scott Bessent remains a contender for the post, with reports that he met with Trump at Mar-a-Lago last week. And as you can see there, TJX slightly weaker this morning. It is boosting its earnings per share forecast for the year. The CEO says that customer transactions across the company drove up sales in the third quarter, and its treasure hunting shopping experience is appealing to a wide variety of customers. TJX is also planning to enter Spain with its TK Maxx banner in 2026. Comcast plans to spin off some of its cable TV channels, including MSNBC, CNBC, and USA. The NBC broadcast network, Bravo, and the Peacock streaming TV business will remain with the parent company. Now, according to the Journal, the separated networks produce about $7 billion in annual revenue. Comcast shares are up about 1.4% in the early trade. That's your brief. John.
Hey, Danny, thank you. More from Danny in about 30 minutes' time. Up next on the program, the Morning Calls, plus Pierre Farago of New Street Research previewing NVIDIA earnings, which drop after the closing bell. That conversation's up next. This is Bloomberg.
On the heartbeat of the tech spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
The opening bell around 1 hour and 15 minutes away. Equity futures on the S&P 500 shaping up as follows. We're positive by 0.2%. Let's get you some morning calls. First up, Oppenheimer downgrading JP Morgan to perform, citing lower guidance on net interest income. It's an interesting one. We're down by 0.2% there. Your second call from JP Morgan, cutting its HP price target to $41. The analyst expecting in line or slightly softer Q4 results. We're just about unchanged there. And finally, Citi downgrading target to neutral after what they call very poor results, saying it's at risk to lose even more market share to its competitors. Nothing unchanged about this move. That stock is down by 19% in pre-market trading. Let's turn to NVIDIA. The chip giant reporting after the closing bell. Its forecast expected to show whether the world's most valuable company can continue to deliver on AI demand. Joining us now to discuss, Pierre Farago of New Street Research. Pierre, welcome back to the program, sir. Later on this afternoon, after the closing bell, when those numbers drop, what are you focused on?
Well, my focus is actually going to be mostly on how the stock reacts to numbers. We are like in a very unusual situation for NVIDIA, where the street, like sell-side analysts, in average, expect revenues from the data center business for 2025 at $165 billion. And we think investors, so buy-side investors who follow NVIDIA, own NVIDIA, have already expectations for that business north of $200 billion. So expectations are very, very high. So what we expect to see tonight is a bit like all, the indicators for NVIDIA are on the green. We think they're going to guide above where consensus is today. And the question is going to be, is this above going to be enough, to keep investors in the stock going forward?
Pierre, does it matter why they increase their forecast, which everyone expects them to do, whether it's going to be because they are able to meet demand or whether the demand is just so high that they can charge really high prices, even if there is a bit of a production issue?
Yeah, so in terms of operations, that's exactly what you're pointing at. Demand is still very, very good. We follow very closely pricing and the availability of GPUs in the market, and the market is still very tight. It is not as tight as it was 9 months ago, but it's still very, very tight. There is still room and plans to increase spending. So you see that hyperscalers in particular, like cloud players, are increasing their capex steadily, and they will continue to increase. We are relatively confident in that. So on the demand side, the situation looks actually very good. On the supply side, the players, key players, which are Micron, Hynix, and TSMC, are ramping up enough capacity for NVIDIA to continue to grow. Now, all these indicators remain the same. They are 6 to 12 months visibility. And of course, the debate is going to move to what happens in 2026 from now on, much more than what's happening in 2025. So we know 2025 is very good, is going to be very strong. Maybe expectations are a bit too high, but there is no major concern there. What's going to matter is how investor sentiments form about 2026 based on what NVIDIA reports tonight.
Well, and part of that comes really down to what the business model is. Is it entirely for hyperscalers? Is that a benefit as much as people have been worried about that being a possible detraction? The fact that the mega tech companies are the biggest customers and the ones that can't seem to invest enough. Do you need to see in these earnings for people to feel that 2026 is going to be good? Do you need to see a sign that you're seeing a broadening out in the application, a broadening out in the purchases of some of these highest tech chips?
Yes, it is definitely a very important aspect of the story. So you might feel bad about a market in which 5 players represent about half the demand. But if it's a market in which there is only one supplier, it's still actually quite all right. And actually, what we've seen is that other players, like you could say an Apple, a Tesla, and smaller cloud players like CoreWeave or Lambda, and then you have a very, very long list of additional players who want to